Hello, everybody, and welcome to Ticker Talk. We are going to, as always, take a quick look at the markets, see if there's anything going on we need to know about, and then we're going to dig into the tickers of, or the charts of some of the stocks you guys want to take a look at. So let's get right going on this. Of course, as always, start with our disclaimer. We'll just blast through this. Everything we do here is for educational purposes only. Not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. Okay, so I think everybody knows who I am, so we'll just blast through past this screen. Hey, if you're watching the recording, go ahead and hit that like button. All right, so let's take a look at the markets. We're going to start with the major indices. We'll look at some of the other indicators in the market, like the VIX. We'll look at the 10-year yield, the dollar index. These are just so important to the market these days. We'll look at some sectors. Aren't really any setups I'm terribly thrilled about. So if you're here for setups, sorry, I'll apologize now, but this market is just a bit of a mess, as you will see. Okay, so we are looking at a chart of the S&P 500. As you can see, that this has fulfilled its head and shoulders almost to the penny, and bounced off of there and bounced up and got into that SPY 368 to 370 area, or got past that actually yesterday. Gapped up well above that, which was really nice to see. That was really strong, but what wasn't strong yesterday is that it just went down all day. I mean, it did bounce off the lows, and we should maybe look at some intraday on that because that is important, and where it bounced was important as well. You don't really see it on this chart, but when you look at lower time frames, you will see that right in around this area here, or in around 368, which corresponds with 3,700 on the futures. Really important support level, and it did bounce off there yesterday, as you can see. Even today, I mean, we closed just above that level, right? I see right now in the after hours, the futures are just below 3,700. So that 3,700 level is important, and it's going to, correspond to here. I'll just get a line drawn in here so this makes a little bit more sense. Kind of comes off of that low right there, almost. Oh, that's actually 369. It's actually the level we want to look for is a little bit lower than that. And about there. Okay, good. So yeah, this area is really important. This is a real inflection zone. And you can see we're starting to spend some time in here now, between this 368 and 370. We need to climb out of here because if we don't, we're going to be coming down, testing these lows again. This is what the market is threatening to do right now, and the futures are down right now. Tesla's earnings disappointed to a degree. We'll look at Tesla a little bit later. We need somebody good to come in tomorrow morning and lift this up, or maybe something happens overnight and lifts this market up. But as it stands right now, it looks like more weakness ahead. Now, all that being said, I'm seeing the divergences all over the place. There's sort of divergences in how the market's reacting to some of the fundamentals. We saw that with, our terrible CPI print, and it just turned into, a fantastic day last week. And that sort of thing is continuing to a degree. As we'll see, you'll see that the, yields have moved up strongly. The dollar is moving up strongly, and the market actually hasn't been that weak in the face of that. There was a ton of Fed speak today. It just seemed like the Fed guys were yapping all day long and just saying the same stuff over and over and over. It's, kind of getting a little redundant, in my opinion. I don't know why these guys just don't shut up and, go study the markets a little more and maybe take a look and see that, in the past, they've stopped raising rates, before inflation has peaked. Everybody's starting to come to the conclusion, or the consensus is that inflation has peaked. So why are they still raising rates? Anyway, that's maybe a bigger discussion for another day. So that's where we're at. That's where we're at with the S&P 500. Oh yeah, we were going to take a quick look intraday because it is kind of interesting intraday. We'll look at a 5-day or 5-minute chart. It's the one in the middle here. I want to go back to yesterday because you can see yesterday we came right down. So I mean, we gapped way up, and this was apparently the biggest gap since I believe it was November of 2020. Okay, so kind of we've had a lot of record-breaking days lately, and yesterday was kind of another one with a giant gap, and then it instantly failed. Right, we opened and it didn't. I mean, it went a tiny little bit higher and then just crashed down. Right, and it came crashing all the way down into this 368 area, which again, as I said earlier, corresponds with that the SPY futures 3,700. So a level that futures traders watch very closely. We bounced from there really nicely, nice strong bounce, came back down and tested that low. Didn't even come right down to it before consolidating and then bouncing again. When it consolidated here and bounced in here, I thought, oh, this is fantastic. I was so happy to see this. I thought this is great. Here's the test, pass the test. We can just go up from here. We can rally now. We can really rally now because you can look to this and say, hey, we tested and away we go. And it did rally overnight, and then or in the evening session, and then you can see by the pre-market open, and this is 1 a.m. Eastern, I believe. No, sorry, it's 1 a.m. where I am. It's 4 a.m. Eastern. Is the pre-market open? And you can see, we gapped down a lot. We continue to come down, tried to rally up a little bit, and then, into the regular pre-market sort of trading, it came down, consolidated. And then we just had, pretty much a messy day. Did try to rally a couple of times, but then had this, this big sell-off late in the morning. And we did kind of climb out of that hole a bit, later in the afternoon. And like I said, managed to close just above that, the 368 and the S&P futures 3,700 level. We've since given back some of that. Tesla's earnings disappointed, as I said. That's what this mess right here is with these two big candles. And I'm not sure why we're pulling back now or, in the very recent past this afternoon. So that's where we sit with the S&P 500. The Qs, so in other words, very indecisive at an inflection point. Probably a strong move one way or the other. All right, so let's go to the daily chart of the Qs. We're looking at pretty much the same thing. You can see how we went up. We've come down, and we're at an important support level here. It's not major support or anything, but it is important. It's important to hold this, and you can see we've had a lot of price action around this level. We should actually probably turn that into a major support. Need to bounce here. IWM, the small caps. Now, the small caps have been leading this market lately, or outperforming this market anyway. And today they underperformed. Now, when we're coming off a bottom, when we're, in the late stages of a bear market, it's usually the small caps that lead us out of that. And also some of the leaders from before the bear market too, think of your FAANGs, right? They should be leading us out of the bear market as well. But for the most part, the small caps are going to outperform. That's where your risk on is. And, when you're coming out of a bear market, when you've got those bear market rallies going on, there are risk on rallies. So you expect to see things like IWM outperform. Well, today, IWM was down 1.7%. The NASDAQ, the Qs, were only down 0.36%. The S&P 500 was down 0.7%. So you can see that these small caps really underperformed today. So that's a bit of a concern. It might be nothing, and it might be. I mean, you could have a bullish view of that, thinking that, okay, well, if we're really going to be coming out of this bear market, we really need to see tech stocks outperform for a bit. That's really when people are going to get confident, and there's probably some truth to that opinion. I'm of the opinion that, personally, I'm of the opinion that we need to see those small caps outperform. But we also need to see some leadership from stocks like Apple. Apple is such a bellwether for the market these days. We need to see Apple performing really well. It'd be really nice to see Tesla performing really well. These kind of large cap tech stocks. So we're getting a lot of mixed signals. And we've got some decent breadth stuff going on, with the number of stocks now above their moving averages, especially above the 21-day moving average. And you can see that, some of our indices have started to move above the 21-day moving average, and that's really important as well. So there's good stuff going on. There are positive signs here, and there's also some negatives. So again, like I've said, really indecisive right now, and I can't make up my mind which way I think it's going to go. It's just so messy and indecisive. I don't think anybody knows. Nobody does know where this is going to go, and we just kind of have to go with the flow a little bit. Which for most of us as investors is really just kind of being hands off right now until this gets a little more decisive and really picks a direction. Okay, let's look at the volatility index. It is still, this trend line is behaving well off of this trend line. We had a chance to break down below this trend line and the 21-day moving average today, and didn't do it, unfortunately. But the market was down, and VIX is barely up today. Kind of printed an inside day, so that's okay. VIX did spike up earlier, but it pulled back and everything, and it's not spiking way up either. So again, it would be really nice to see VIX break down out of this trend line, break below the 21-day moving average. That might give us some confidence to with our longs. The 10-year yield. Part of the reason for our down day today is this big move up in the 10-year yield, and you can see it's a small candle here, but it's broken out, or there was a big gap up, and then we had a small bodied candle. You can see it has broken out to new highs. What was this up? Yeah, up 3.23% today. We're well above 4% on the 10-year yield now. And we also we've seen, I don't have it here, but we've seen a yield curve inversion again. I think it was the 3-month and 10-year, or 3-month and 5-year inverted, and that's always doesn't predict a recession, but every recession, that's the last 8 recessions that have happened, you have seen that particular yield curve inversion. There have been failures on that too. It doesn't have a perfect record or anything like that, but it is one of the things that precedes a recession. And we had that before too. We've had that 210 invert. I think it was earlier this year. And we may very well be in a recession now. If you just look at GDP alone, then we've had 2 quarters of negative GDP, so or a negative growth on GDP. So technically, we are in a recession. So I'm not terribly concerned about the yield curve inversion. I don't think the market is either, because when you compare this kind of stuff with the 10-year yield being up this much, and markets not being down that much, at least the SPY only being down 0.7%, the Qs only being down 1/3%. You would expect to see more downside on a day when the 10-year yield is up, over 3%, and the dollar index is up quite strongly as well. The dollar index today is up almost 1%. You can see bouncing off this 21-day moving average, we have a little bit of a early downtrend here, but we've still got this uptrend, and we're starting to form, a bit of a triangle here, a symmetrical triangle in this zone. So it'll be interesting to see how that plays out. Obviously, we want to see this break to the downside, not to the upside. All right, gold. We'll just blast through some of these really quickly. But gold is coming in as support. This is a fairly, we've got to go way back. before we start seeing these levels again, back into 2020, right after the COVID crash. Was the last time we saw these levels, other than a few weeks ago. So yeah, we'll see if this support holds. If not, I think there's a lot more downside in gold here. We could be coming down into, well, easily down into testing 1600, and potentially even lower than that, into the 1550 area perhaps. So could be some volatile action in gold over the next few days. Silver, I think, was kind of looking this pretty much the same. Yeah, should be fairly strong support in here, though. I mean, look how many times we've come and touched here and tested this, and it's bounced away. So that's interesting. And if this bounces, it might take gold with it. Copper's looking. What was going on with copper? Oh yeah, we were looking at this this downtrending channel. Haven't made a lower low yet, but it's certainly threatening to. DBC, the General Commodities Index, or ETF. We had that when we broke down below that major support, we moved back up, broke above the trend line, and we are now, you can see, have come back under that downtrend line. So this downtrend is still firmly intact on this. We just have, we keep having lower highs, and we've got that recent lower low. We should expect, though, to see some support in this area. This has been fairly reasonable for support in the past, so I would not be at all surprised to see a bounce here. The agricultural commodities, we're keeping an eye on that bear flag, and sure enough, that has broken out to the downside, but it's in no hurry to move to the downside. So, and kind of threatening here to show us a bounce. All right, so oil, this is the big one, of course. Energy sector is the only sector that has been working this year. It's still pretty much working. Oil itself has been looking a little weak. We had that downtrend channel. We tried to break out of it. We came back into that downtrend channel yesterday. Let's just zoom in a little bit here. Came back into that yesterday, and we bounced out of it today. Now, I just noticed this today. This is kind of threatening to look a little bit like an inverse head and shoulders here. I have drawn the neckline in there, and that neckline on the way back up corresponds with that major resistance area. That would make sense. The neckline should be resistance. So it'll be interesting to see how that plays out. If oil continues on the way up, then it will be an inverse head and shoulders. Now, whether or not it breaks out and fulfills its destiny is yet to be seen. Of course, I mean, we're still only really what looks like halfway through the right shoulder on this. But when we're in a downtrend and we see an inverse head and shoulders, that is more often than not a reversal pattern. So we would expect to see this then reverse to an uptrend, and we can measure that. You've all seen me do this a million times, but we measure like this. We just measure out to the neckline. We can just grab that line, and we'll put that, at the breakout point. And that gives us a target on oil of $115. I think that's a fairly reasonable target over the next couple of months, especially as we start to get into winter, especially if there's some really cold weather. And of course, depending on what happens in Ukraine and Europe with their energy troubles. Okay, let's just get that drawn in. So something to keep an eye on here, something to watch for. But yes, it does look like, although we do have some short-term resistance overhead with the 21-day moving average, with the 50-day moving averages right there, and sort of a minor support resistance level there. There is some short-term resistance, but it looks like we'll be heading back up again. Natural gas, though, has just completely fallen apart, at least natural gas in the US. We were watching this this downsloping bear flag, and I mentioned that these usually fail, which would mean that this should have broken to the upside. But this, as you can see, clearly broke to the downside and has come into a support level or support area in around the 550. Now it's trying to break through that line, but again, this is more of an area than a thin line. So there is time for natural gas to save itself before coming down to the next, the next area we're going to be watching is the $5 level on natural gas. Let's look at XLE, the energy ETF, and you can see that this is pretty much breaking out of this range. Now, we kind of fell apart here, came down, got down a lot, moved back up. Now we've consolidated right under resistance, and we are breaking out right now. Now we got to watch out for this pivot here, because that could very well act as a little bit of resistance as well. So, watch this zone. Tomorrow is key on this, but I mean, this looks primed to break out higher. It's going to need a little bit of help from crude oil. I see in the after hours, crude oil is up 0.5%, so it may be getting that help. So yeah, if this breaks out of here, should be a fairly easy ride to, should probably draw that gap in, shouldn't I? We've got a gap here to watch out for. All right. Looks good. Yeah, this gap right overhead, and then of course you've got this this 52-week high, which may even be an all-time high. So let's get that drawn in as well. Things to watch out for moving forward on this. There we go. Okay. So this should be really interesting in this ETF over the next week or so. XOP looks very similar. These are the oil producers. A little more focused on this. Still under its resistance line. But again, threatening to break out, should break out tomorrow. And it's got very similar stuff going on. It's got, it's got the gap that could act as a resistance overhead. It's a little farther overhead than it was in XLE. And of course, you've got that all-time high. But like I said, looks like this is going to be moving higher. And oil services ETF. So this one, again, you can see the same kind of pattern. This one broke out very strongly today. Got above that former pivot back over there. This one looks ready to run. So if this is going, then our others, XLE and XOP, should go as well. So interesting stuff going on in the energy sector. And what was the... oh, there was a stock I wanted to show you. I've forgotten what it was. Hang on, let me go back over here. Yeah, it's a oh, MRO. Yeah, okay. It's in the energy sector. It's got a nice looking bull flag, forming a pennant right now. Looks ready to break out. So let's just draw this in. So you can see that flag nice and clearly. With all these ETFs looking ready to go, the stocks within the ETFs should go too, of course, right? So yeah, this one looks like, I mean, this is a really nice big flag here. So, if this breaks out, I mean, this is the measurement on this is almost too good to be true. Taking us up to, from $28, $29 up to $39, up 30%. I mean, I suppose it could happen, but I think it needs more catalyst than just this bull flag. But this is definitely something worth keeping an eye on for tomorrow. If you see that oil's up overnight, if you see that these energy ETFs are up, well, this is probably gapping up and probably worth chasing. Not investment advice, but it looks like it could really move. So this is definitely one of the better setups I'm seeing. Of course, you got to watch out for these highs right up here in around 32 for resistance. But still, from 29 up to 32, that's around 10%. That's a decent move. So why not try and play that? I'll leave it up to you where you're going to have your stops. I think it's pretty obvious where you put your stops, right? Either under the flag pattern or under today's candle. Both would be good places to have a stop on this. So size accordingly if you decide to play that. Okay. Tan and solars are just ugly. No need to really look at these. We'll just blast through these quickly. You can see we're down at the bottom of the channel right now. Maybe we're coming into support here, but it's not looking good. And with other parts of the energy sector outperforming at the moment, I think there's better places to be right now. It could flip though. And quite often things will flip at a point like this. But I don't think the rest of the energy sectors have moved enough for this to be ready to flip yet. I think the traders are going to want to extract more money out of the dirty energy before they go back to tan. So, maybe we see some sideways consolidation for a week or so in tan, while the rest of energy does its thing, breaks out if that's what it's going to do. And then we might see some rotation back into the cleaner energy stocks. And I see Marvin has asked, what about Oxy? So while we're on the subject of energy, why don't we look at Oxy? And we can see that this is drawn this uptrend line in this. This is still, that major uptrend is still intact. Or I guess intermediate term uptrend still intact, but we've got a short-term downtrend going on here. In fact, this whole thing is forming a bit of a pennant here, isn't it? Oops. Let's get that there. That looks a little cleaner. Okay. I'm going to ignore that little spike day there. And I'm also going to draw in. It's going to come from here and draw that like that. And you can see we're kind of tightening up in there. And we're also, you can see these two moving averages too. We got 1, 2, 3, 4 days after this little, this nice big green candle here. We've had 4 days above the 50 and 21-day moving average, making a little bit of a bear flag, a small one in here. But this is nice. This is nice little price action in here, nice and tight. You can see yesterday tried to break out downwards, got caught by those moving averages and moved back up a little bit today. So it's consolidating nicely in here. And from a nice consolidation, we often expect a big move. And I got to think that the move in this, considering everything else I've said about energy, well, the move in this is going to be to the upside. Will it have enough strength and power to move right through that former pivot there, these highs here? That's hard to say. It is going to run into some resistance, in this area. So watch out in that 74 to 76 area if you're playing this. And there is actually one more energy name that I was asked for. Just wasn't sure if he was going to make it or not. So we might as well, we're looking at all this energy, we might as well look at his as well. And I'm in this stock. There was some pain in here, but it did support nicely where it should have, right? Which is off this pivot, which is also a support level that goes here. So let's get that level in. That comes from right about here. I mean, that was pretty much bang on $18, right? So yeah, after this broke down, and you can clearly see a range in here. And it's a little messy, not the cleanest thing in the world, but and you could even actually call this a head and shoulders. I mean, this is actually a head and shoulders here. I'm just seeing this now. Let me draw that in. Okay. Something like that, and then we've got the head. Oops. A lot of head and shoulders on a lot of charts lately. I don't normally see this many head and shoulders, and they're all over the place. They're in the indices. They're in individual stocks like this. So there's your head and shoulders pattern. There wasn't much of a. Ah, here comes Jess. Okay, well, give him a sec too. I see his audio says it's still connecting. I'll just have a little drink of my water here. And oh, hey, Joss. As you can see, we've just been talking about energy.
Oh, nice.
And we're looking at the overall market basically. We just got into energy, and we were looking at a couple of the individual names. I just looked at Oxy for Marvin. I thought, well, we're here looking at energy. Why don't we look at Magnolia? I just started seconds ago. I just pointed out how how it had broken down, and that support level held nicely, and it bounced really strongly off of that. And then I noticed this head and shoulders here. I was just drawing that in with the neckline. And, this behaved really well off that head and shoulders. If I put a measurement on this, I bet you it's almost perfect to where it bottomed out there. So that's great. This is a technically, okay, quite make it down to the target. That's fine. But this is technically well behaved in here. We bounced off of that, and we've come back up into that consolidation that was part of that head and shoulders. We seem to be consolidating in there again. But as we've seen in a lot of the ETFs, if you go back and watch the video, you'll see that I was pointing out, sort of a resistance level that a lot of the ETFs are coming up into and then broke out of. And this looks to be doing the same thing. So I would not be surprised to see this continue higher and break above this resistance level tomorrow, and then maybe go and attack this level here. Let's get that drawn in. Right about there, yeah, 25 or so. So a couple levels to watch out here on the way up, but it looks to me like energy is about to break out and have another nice leg up. And that is definitely going to drag Magnolia with it. How high it goes, hard to say. It has been underperforming energy a little bit. But it looks like, there could be a nice strong leg. Maybe we get another leg like we just had. If that's what we saw, if this is one and that's two, and then if this leg that we're in now is 3, that would target up into the 28 level for that. That seems like a reasonable target. And you can see, we would have a little bit of resistance up there. Once we're through 25, it's a clean shot to 28 easily. Yeah, not a sure thing by any stretch of the imagination, but it's a nice setup, especially when combined with the rest of the energy sector.
Sweet, perfect time.
Are you still in it, or are you looking?
I'm not. So I tried buying, like that the first breakout when it made the head.
Yes.
I guess of the head and shoulder pattern, I bought there, and then I ended up selling because obviously it didn't work out quite nicely. And then I was looking at it today, and I saw that it was a nice little setup there, and that's the reason I was asking, because I was actually planning to maybe jump in if it breaks out tomorrow. But my question is, would you wait to buy above that resistance, just above 23.88?
No, I'd be keeping an eye on the rest of the sector. Like I said, we were talked about oil a lot, and we talked about how any of these names, I'll back up to XLE real quick.
Okay.
So if you look at XLE, if it'll come up, here we go. See how it's kind of similar, right?
Yeah.
And you see that it is breaking out. And it's got this this one little pivot to go, but there is some resistance overhead with that former gap, right?
Yeah.
but it's going. So I kind of said, okay, yeah, if that continues to go, then whatever energy play you're looking at is probably good. And then I also I showed everybody oil services. So this oil services ETF, it did break out today.
Sick.
Broke out quite strongly, closed at the highs. Looks great. Looks great for continuation tomorrow. Oil is up in the after hours. So you probably get a little bit of a gap up tomorrow. So I suspect that oil is probably going to be strong tomorrow. All of these ETFs and everything are going to gap up a little bit, and that something like MGY will gap up a little bit, which would put it, it's not going to take much of a gap for it to be right at this resistance level here, maybe even above it. So I would kind of be inclined to, figure out where you're out of this, right? Initially, probably has to be, under that candle or under this 50-day moving average, right?
Right.
Maybe somewhere halfway in here, you could do as well. I kind of would just size for being under here.
Okay.
Which is a wide stop. No doubt that that's a wide stop, but maybe sizing for that, and then setting yourself up to maybe add when it breaks above this 25-25 area.
Okay.
So, get an initial, get a starter position that's maybe a half or a third or whatever you're comfortable with. Yeah. And thinking, all right, if we do get going, we get some momentum and we move through this one, then I add some more. Because I think that once you're above 25-25, it's a clear shot to 28.
Yeah, I think so too.
I think it's a decent setup. There are some other ones too. I mean, if you want to look at something else, again, I'll just show it really quick. But MRO is one that's had a nice run and has got a really nice clean bull flag. So I went over this. If you go back and watch the recording, I went over this in a little bit more detail. But I'm liking this kind of setup too, right? So there's some energy names that are set up nicely. And maybe even better than MGY, to be really honest, right? I think this is a bit of a here.
Yeah, that one looks like a cleaner bull flag. That other one, what would you consider that on MGY? Because I don't think that's quite a bull flag. That's what I kind of wanted to ask you today too.
Yeah, I don't really. It's just messy. Like there's so many charts I'm looking at right now are just messy, right? You've got a lot of volatile action in here, and this, or at least what's happened here over the last 2 weeks is more typical of what the market is doing, right? Messy, volatile. Whereas MRO seems to be doing kind of more of its own thing. It's cleaner. It's still volatility within this flag, but it's cleaner. It's a little more well behaved, and we looked at Oxy as well. But you can see that there has been a little bit of volatility in Oxy as well, right? It's a little bit messy, but again, it's cleaner. This is a cleaner, symmetrical triangle that it has formed here, right? The breakout to me out of this one seems cleaner. I just wonder, considering how long it's been in this range, is this resistance zone here going to be really strong? So, this one may not have as much room to run, right? From 70 to resistance starts at 74-ish. There's only $4 in that. Whereas some of the others like MRO and MGY, they've got more room to run, in my opinion.
Okay. Cool.
So yeah, you can see that this is where the setups are. It's in energy. It's in dirty energy, unfortunately, but that's what we got, right? And that's kind of what we've had all. This is what's worked all year, right? And so
on that subject of it being like the leader all year, so I read somewhere, it could actually even been Mark Minervini's book, but that when there's a bull run, like the last bull run was in tech, right, or led by tech. Yeah. After another bear market, after a bear market happens and another bull run happens, it's never really the same sector that leads the bull, is that something? And I was thinking about that, and because energy was so strong this last year, is it possible that maybe energy is that, or how would how do people go about trying to, I know you can't really guess, but I don't know.
Well, I mean, I've said it plenty of times, right? The long term, I'm bullish on energy. There has been a lack of investment in energy over the last 5 years or so, and especially in the last 2 years since I'm not being political. I'm just putting a time frame on it. Since Biden was elected, and partly because of his policies, right? But energy companies have been afraid to invest, have not wanted to invest in new projects. And that's created a bit of a longer term problem, which is going to create higher energy prices longer term, in my opinion. Is there much upside from here? There probably is over the winter. But as we get into the spring, I don't know anymore, right? I'm not able to, I can't wrap my head around what happens after the winter. Other than, so as we get deeper into the winter, I want to be more and more careful with this. But right now, I mean, we're heading into winter. This is kind of the play. This is what I've been expecting to happen if all this stuff breaks out. If these breakouts happen, if we have another leg higher, this is sort of, this has been my expectation all along for this time of year. I don't think that energy is long term, though. I don't think energy is going to lead a new bull market. It's not big enough. It's incredibly important, but as the market cap percentage of the stock market, it's actually quite small. I don't know the exact number, but you'd be surprised at how small it is. If you find that number somewhere, you'd be surprised how small it is. So I don't think there's enough there to lead the market. I kind of, I know that you hear this all the time. It was tech leading last time. Where do we go from here? I just still think we're in a technological society, and that there may be another sort of tech revolution coming, and maybe it's tech again. Or maybe it's medical. Maybe it's medical tech that is the next really big thing. That wouldn't surprise me. So a subset of the medical sector or health sector, right? Maybe that's what really leads in the next bull market. But yeah, it's hard to say. Maybe we need to go pay attention to some futurists and see what they have to say for what are they looking at 5 to 10 years out, and maybe that's where we should be looking as well. So, and there's some really smart people out there that that look ahead to these things. And I think if you watch enough of these guys, if you only watch one guy, then there's a good chance you get it wrong. But if you study 5 or 10 of these guys, maybe there's a common theme you can find.
Okay, sweet, sounds good. Thank you.
Cool. Yeah, no problem. Okay, I think we have beat energy to death here. Or we've massaged it into actually breaking out and rallying tomorrow. All right. Oh yeah, what was I saying?
Thanks for going up again.
Sorry?
I said, thanks for going back for me.
Yeah, no problem. Okay, we'll just quickly go through. We just got a few more sectors. We'll just blast through these because there's not a lot to see in the rest of these. Chopping around near lows, near bottoms, but off the bottoms, right? So this is consumer discretionary. Let's look at industrials. Again, showing some relative strength here, though. Off the lows, bottomed nicely and continue to move higher. A little bit of relative strength today and yesterday. Interesting. So maybe we should be looking at some of the industrial companies as well. Maybe something like I know I think Lockheed Martin just had earnings, if I'm not mistaken. Yeah, they did. Okay. Oh, nice big green counter. Boy, how did I not look at this today or yesterday? Okay, so Lockheed Martin just had earnings. They're nice and strong, coming into resistance. Maybe some of the other aerospace companies might be worth a look. Maybe the aerospace ETF, that's XAR. A little homework for you guys. Maybe look into industrials and aerospace because, yeah, relative strength going on here. This is something we want to look at. If anybody finds anything nice, let me know in the Discord. Let everybody know in the Discord. And I'll be looking a little deeper into that sector as well. Okay, let's look at financials. And financials doing all right. Had this break, this gap down below the major support, and it's taken it right back, and it's trying to hang on to it, and it's above the 21-day moving average. So things could definitely be worse here. Let's look at technology. But yeah, I mean, this is a sector where we really need to see some performance happen, and it's not totally happening, right? It did manage to save itself, but it found resistance and it failed there. Whether we can, try again at this, hopefully we can. Don't want to be testing these lows again in this, and it kind of looks like it's gonna. Communications sector. Again, is made a break lower and bounced. It's fairly tight in here, looking somewhat fairly well behaved, but again, under a little bit of minor resistance, but also holding above a support level. So that's good. Maybe this just needs to consolidate in here for a few days, and then it can break out and go attack this level. Okay, let's take a look at some of the big tech. All right, so Meta. It got ugly. It broke down. It's coming back up, and now it can't get through the resistance. So maybe it just needs to consolidate and then break through, or is it going to roll over? I don't know. We're kind of at an inflection, right? Much like the markets, this stock is definitely at an inflection point here. And man, there is so much hate on Meta right now. It's like everywhere you turn. I mean, people are hating on Meta. They're saying that like the metaverse is a complete flop. Just bad news everywhere. And it's not breaking down. And, when there's this much bad news in a company and it's not breaking down, maybe it's time for it to go up. However, I'm not that daring. I am not catching that falling knife. Apple, I'm kind of liking what I'm seeing out of Apple, kind of. It has at least come back up to the top of that channel. I'd really like to see it break out the top of the channel, but at least we got back up there. Because for a while, I mean, after this mess, these 2 days, it looked like it was going to be going back down and testing out the bottom of the channel again. But nice to see we made a move back up there. Let's keep going. Let's not go back to the bottom of the channel again. Amazon. So this, again, one of these, one of those really messy stocks. And it's just volatile all over the place. And in a day, everything could change in this. And I don't know which way it's going to go. I don't know. I'm looking at this. I don't have a clue. Do you? I mean, maybe we've got some support there, but it had no problem breaking down through that violently a few times. So who knows if that's going to hold if it comes down and tests that again. All we've got to go on right now, we've got this indecisive doji right here after a big hot mess. So hands off. I don't want to touch that thing. Netflix. So stupid Netflix. Oh man. So for months I have been beating the drum on this consolidation under the big gap, waiting for this thing to move into the gap. And when does it do it? On earnings, of course. And what happens? We gap up right into almost into the middle of that gap. You can't. How do you buy that? I mean, I talked about how do you buy that, right? And I thought that maybe, and I said, what's probably going to happen here is, and I was being a little facetious, but so it's probably going to gap up way into the gap, and then you can't buy it there. You got to kind of wait and see if we get a pullback down to where it broke out from, and then goes up. Because I don't want to buy it up in here. So, on the other hand, it's kind of doing what we expected, right? It's moving into that gap now, and the expectation is that it moves up to the top of the gap. Now, the top of the gap is like 329. Where are we now? We're 373, so like $55 away. It might need more catalyst. It might not get to the top of the gap until next earnings. So we might get a chance. This might set up a pattern in here somewhere for us to get in on it. But again, I can't chase it here. If you bought it somewhere down in here, like I think actually, after this big green reversal off the 100-day moving average, and then maybe you could have bought that candle. Once it got back above the 50 and the 21-day moving average, that might have been a half decent buy. And you're laughing now, right? So if you did that, congratulations, well done. All right, Google. Again, another messy one. More base-ish in here. I mean, we definitely, we do have a base, so we can just draw that in. It's a big base, but you know what they say: the bigger the base, the higher in space. So let's just tighten that up a little bit. There we go. That looks better. Okay. So it went up to the top of that base. Resistance up in here, pulled back. Now it's kind of in where it had a fair bit of price action before as well. Again, very indecisive in here. Could go either way, and it could move big if it goes either way. So probably a play in here. You could almost play, and maybe you could do this with Meta if you were so inclined. If you're a day trader, you could sell this on a breakout of the low of that, or buy it on the breakout above that. That'd be one way to play it. You could even do something like that with. Oh no, you can't do anything with options right now. It's got earnings coming. So yeah, maybe it's just gonna chop around until earnings, and then it's gonna either break out the bottom of this range or out the top. Microsoft. Again, a little bit messy, not as bad as some that we've seen, but again, very indecisive. That same indecisive doji today. So who knows? We got to wait and see. And again, earnings in a couple of days. When is this? The 25th. What's today? The 19th. So next week, yeah, a lot of big tech reporting earnings next week. Tesla. All right. So as I'm sure everybody knows, Tesla reported after the close. We'll take a look at that. We'll go intraday on this, but we'll see. Let's get some big picture perspective here. Okay, you can see that this level that we came into the other day, very important level in around 206. It's kind of, that level is holding it back from breaking 200 basically. If it breaks down through there, then we're kind of looking at this 186 level, and then it gets really gappy and lots of free air below that 186. So we obviously do not want to see it come below there. But it was nice to see it bounce off of that level. That was important, that 206, okay? So let's remember that. Let's go to the after hours and see what we've got. Okay, so we're looking at a 5-minute chart. You can see that I think Algo's front ran this. I was watching this on a 1-minute chart, and this was going up and drawing this big green candle before any news of earnings came out. Nobody, I've got a couple different sources going, and it did not look like earnings were out when this big green candle happened. And then, of course, we got the giant red candle, moved down, lots of chop, chop, chop. And we are falling off after hours. I bet you this was the start of the call right here, or sometime in the call. I don't know what time the call was. If anybody knows, did anybody listen to the call? Or know what time it started? You can type that in the chat if you don't mind. But anyway, obviously, not great stuff going on here. Market not terribly thrilled with the earnings themselves, and from the appearance of this, not thrilled with the call. And you can see we are coming now very close to this 206 level. Look where we spiked down to, right? Almost to the penny on where that is a support on the daily chart. And we're coming back down here. So I would not be at all surprised if we see some test in this, we see some consolidation above it maybe, or if we come down and then bounce off of it, not as sharply as this did, but it certainly looks like that we've got a test of that 206 coming. Without knowing, because I haven't had time to really dig in their earnings or anything, and without knowing what's gone on in the call, I can't really make a decision on whether I think that level is going to hold. Other than technically, it probably should hold. It's a fairly decent level, but we'll have to see. I mean, if something's happened on the call that the market really doesn't like, then that 206 could break, and I really don't think that in that situation that the 200 holds either. So that's where we are in Tesla. Semiconductors suck, but holding for now. Again, not looking terribly hopeful. Test this level enough, and it will break. So again, we need to see this indecisive market move to the upside, and that will help these semiconductors out. But there's no reason to be in semiconductors right now. Okay, thanks, Marvin. Marvin says the earnings call, Tesla earnings call started at 5:30, so that was now 8 o'clock, a while ago. Okay, surely the call's not still going. Let's go back to our Tesla chart though and look for 5:30 on there. Whoops. Was that 5:30? Yep. Yeah, that was the start of the call right there. So everybody was very hopeful at the beginning of the call, but didn't stay hopeful for long. Okay. All right. Moving on. Sorry, this has taken longer than it should have, but we did some ticker talk in the middle of all of this. With we had a couple of requests for some energy stocks there. So, all right. So healthcare, nice reversal on healthcare intraday. Let's take a look at this daily chart though. Okay, yeah, it's holding above. It's got a level between it, and it's got two levels between it and the bottom. We are going to get this support level drawn in here now, because this is really starting to be an area of support in around 124. Okay, that held today, so that would suggest a little move to the upside, but it's going to need a little bit of help from the markets. Biotech, what's going on there? Yeah, we were looking at that head and shoulders in biotech. That sort of broke down a little bit, did not resolve all the way to the target, and turned into this upward sloping channel, which keeps getting tested. And we got a couple of nasty red days here. This looks fairly bearish. I would not be surprised to see a break out the bottom of that tomorrow. If that's what happens, then healthcare is probably on its way down to the next support level as well. REITs were the worst performing sector today, and you can see that they are trying to save themselves, hang on to this support, but looking very weak coming into their Staples. Staples did outperform slightly today. That's right, we were looking at this rounding bottom on Staples. That's still intact. Is this going to turn into some resistance in here? Possibly. Jury's out on that. We'll know more when we do the weekend update. And finally, we have utilities. Another messy sector, very indecisive today. This looks a little more hopeful than some of the others. How did it perform today? Yeah, utilities was underperformed, kind of middle of the road. Yeah, not this is not terribly concerning, this price action here. I wouldn't be surprised to see this resolve into a sideways consolidation. All right, that's it. That is all for going through all the markets. And yeah, so we've looked at a bunch of the energy stocks, which are the best setups. So it is time now to see if you guys have any other tickers that you want to look at. You all know the drill. You know what to do. So go ahead and if there's anything you want to, any tickers you want to look at, Ray, was there one you wanted to look at? You were the first one in the meeting today, so you got first dibs. We've already done one for Marvin and for Jess. Ken, is there anything you wanted to see? I'll just give you guys a sec to type those in, or you can unmute as well if you want. I'm just going to pour myself some more water. All right, I see some coming in. I already covered it. Okay, good. Hopefully I covered it in enough detail for you. And Ken says, can we take a look at NEO? We certainly can. Can you tell me why it got hammered today? I was looking for news on it, and I couldn't find anything other than a lot of Hong Kong listed stocks were down quite a bit today, and they were blaming that on the new, what's he called? The leader of Hong Kong. There's a new leader of Hong Kong, and he made his inauguration speech or whatever last night or yesterday or last night. And they were blaming that speech on for NEO and all these other stocks going down. But I don't know, he talked about how awesome Hong Kong is and how it has such a strong economy, but it can be stronger, and that's what they're going to do. It didn't really seem anything to make the market go down. Anyway, so NEO. That's being slow. Okay. Yeah, I think it's been a while since we looked at this. So I think we can call that cup and handle we were looking at broken. That just broke right down to broke down hard out of this this downward channel here, cleared right through that pivot today. Let's draw that pivot in though, because this is probably going to come back into play again. Obviously will if we go back up, or when we go back up. I think we're going to have to back up and see what we've got for levels. Look at that. So there's the IPO open. Look, it's right at the IPO open level right now. And that's what that pivot level is. Interesting. So there should be, we've got this big gap right here. All right. Let's get that one in. Oops, we're gonna have to zoom in on this a little bit here. It'll take a sec to just get some of these past levels here. There we go. That's pretty okay. Yeah, the IPO level is above that. I'm not going to bother with the IPO was important back here. It might be important again. Okay. All right. And we got to get these gaps in. Cool. Well, that gives us some context. Some areas to watch for down below. So you notice how we came right to that gap today and found support there. And that's what it's supposed to do. You know, it is supposed to find support at that gap. It so often does. You know, everybody says all gaps get filled, and this gap may yet get filled. But for now, this is finding support. And, you know, right at these levels from the past. Now, there's a fair bit of room here for this to continue falling. So what do we close at here? 1091. You know, our next support that we would look for is the bottom of the gap around 938. There's another gap right below that. And then we've got a little bit of support area here in around the, you know, the 8 to 850 area. So this is not good though, obviously. This is extreme weakness. To already be in a downward channel, try to break out the top of it, fail, break down through all of the moving averages, try and hold. See, look how we came out the bottom of the channel. We went back up, tried to hold, fell apart. Came to a pivot, right? Should be support right off of that pivot right there. It did for 2 days. Broke right down. Now we're into more support. So, you know, support obviously hasn't been working, and which means that we should expect it not to work, right? You know, it's in a serious downtrend now, and we should expect the downtrend to continue. But if we're looking for, you know, somewhere for this trend to end, I mean, this is one of the places we would look. But it's just so weak today. It's hard to see this turning itself around suddenly. But you never know. I mean, look at the volume, right? We haven't seen this much red volume in this. Wow. Since here. So going back to March. And or sorry, April. Yeah, that one was April 1st, and then March. That's one of the last time we saw this much red volume. So I mean, this definitely could very well be capitulation. I kind of think that if it's going to be capitulation, I kind of think that it needs to have another bad day, but a reversal, or you know, come down, break down through this, maybe hit 10 and bounce off at 10, and then reverse and doesn't have to turn green, but come right back up and get above this low right here. That would be, and with big volume like this or even more, that would be a nice sign of capitulation, and maybe a sign that it can turn itself around. Of course, after that, if there's something like that did happen, it would have to continue that move up. It'd have to follow through for at least a couple of days, and ideally break out above this trend line and this pivot support here, or this pivot resistance right here. So yeah, Neo's definitely in trouble here, but we are in a spot where it could try and save itself. If it doesn't though, I think you really gotta be ready to see some eights, 8 handle in here. So hopefully that's helpful, Ken. If you have any questions, go ahead and shoot on that. Otherwise, cool, good. You're welcome. Anybody else got anything they want to look at?
Hey, Kevin, it's me again.
Okay, Justin, what's up?
Yo, do you have the chance to look at BABA? I know we talked about it a couple times before, but
yeah, sure.
So I said I have a pretty decent sized position in it, and I guess it's like the way it's been performing. I'm probably considering taking off a little bit.
Yeah.
I think I learned from this trade that maybe I should have gone into it a little bit smaller with the smaller position.
Right.
Yeah, just based on like how I'm feeling with it. You know, I don't mind holding, but with the size that I ended up getting, I'm a little bit nervous, I guess you could say.
Yeah, you know, this thing is, there's no doubt this thing's going to be a long-term hold. I mean, I don't see things turning around in China, you know, overnight. I don't see a V bottom in this, really. It'd be interesting to see, you know, that People's Congress is going on right now, and I haven't been hearing a whole lot of news out of it. But it'll be interesting to see what happens after that. Does Xi come out, you know, or she come out with, you know, feeling even more powerful and aggressive out of that? That could be a problem for a stock like BABA, for any of these Chinese stocks, right? So, yeah, it's unfortunate to, you know, anytime we got to stop out, it's unfortunate, but stops are a necessary evil, right? And hopefully it's not a loss. You know, we don't have much more chart below us here to work with. All right, let's just, I keep having to put in more levels and going farther and farther back in time to get these levels, but that's what you got to do sometimes, unfortunately. So there's definitely something going on there, and there's obviously something going on here, and then we've got, I'll just mark that one out with the all-time low. It's my ATL, there we go. All right, let's zoom in back over here, tighten these up. I guess, yeah. Okay. So what does that get us in the 60s? Is there anything in there that's any good? Maybe that one. What do we have right now? 70, 71. I suppose this one might have a bit of memory. Let's just put it on there for fun. Whoops. All right. Interesting. That level that I put in, where I said that might work, ended up being the low today. That's kind of funny. Oh, you know what? Where's my thing? Got a thing missing off of here. Oh, my data window. There it is. What was the low today? 70.52. Okay. And that level, when we drew that, it was 70.68. Okay, really close to that. All right, so it looks like that level maybe had a little bit of memory. It bounced off of that level today. That's nice to see. You know, it did correspond. It corresponded. This bounce here corresponded with something in the past, so that's good. And you can see, you know, we've got levels below at 65 and at 60, and then we've got that all-time low at 57.20. Now, given everything else we've seen on the market, going on in the market, and just how weak this was, I mean, massive gap down and then continued lower. Actually, let's take a look intraday really quick. Okay, I mean, at least it bounced a little bit at the end of the day. And that's a fairly strong bounce. Look at the volume, actually, on that green candle. Interesting. That is really interesting. That much volume on that green candle, off of those lows. Somebody might be trying to save this. You know, look at that, over 1 million shares right there in that 1 5-minute candle. You know, granted, there was, look at the way the volume built in here. Like, okay, so this is a great example of intraday capitulation. You know, because you've got this thing, it gapped down here. We can, you know, show the gap, right? So, you know, closed way up here, Gap down for the pre-market open, continued down. So then we've got this great big gap down, and you flop around a little bit at the beginning of the day, and sort of once you break that morning range, you start moving down. Tries to support, can't support, and then look at here, just falls apart. Look at this volume shooting up. As it's falling apart, these candles are getting bigger and bigger and bigger. The volume is getting, it's getting more and more volume until finally, we come into here, and then we have that first little green candle, right? We come off of there, try and go up, can't go up, comes back down, but at least it didn't go any lower. And then we open, we come down, we test that again, and then we're off to the races here. Massive volume on here. Now, there was still some sellers. I mean, not surprisingly, too. There was still some sellers. For real capitulation flush and then a rebound. If this was going to be a V bottom, would have wanted to see this continue up a little more than this with a little more strength. But by the time this happens, so this is 10 after 3. It's already getting late in the day. So it's going to be hard to get people to commit. And in the after hours, more or less flat. But this action here is hopeful for tomorrow. You don't get that from looking at the daily chart. You see something that's closed near its lows, and looking weak, like it's going to continue down. But after seeing this intraday with that kind of volume there, I am hopeful for this tomorrow. So where does that leave you? I've probably confused you even more, given you more indecision. I think you got a line in the sand.
Okay.
It's really a no-brainer where you put a stop. You put and again, not investment advice, but tight underneath that. And hope if it breaks that is just not a spike down and back up again. You'll hate me if that happens. But
no, I won't hold it against you. But it is that big gap down that kind of like freaked me out.
Yeah.
And you're right. There was really nothing. Like, I mean, at least a week ago, we still had kind of like that other point of reference. It looks like in March.
Yeah.
Yeah, but after it kind of like broke below that, I was just like, there's really nothing else to see at first glance. But I didn't consider that big volume that you mentioned at the end of the day, like around 3 o'clock. But you're right. I mean, I'll take the hope.
Yeah. It could make a difference, and another thing, I don't want to give you too much hopium here, but also if you look here, there is the tiniest bit of RSI divergence, right? Look at RSI. Look at where the low of the RSI is today. It's not quite touching 30, right? It is 32.2. Okay, today. If you look back to the last low, which was here, and the RSI on that day was 30 exactly, and we're lower than that, right? Price is lower than that, but RSI is higher. We go back over here to this previous low, and it is going to be below 30. Yeah, 29.6. Okay, so it's really subtle. It's slight, but it is there. And after a nasty day like today with volume, it's interesting that that RSI didn't break down below 30. So there are hints. There are reasons for hope in this, but just you got to be super careful. I would, in fact, I would even, if you're up early tomorrow, just bring up the intraday chart and see what it's doing, because this thing does trade. This trades quite a bit, as you can see, in the pre-market. So that can kind of, help you decide what you can do. And maybe, if in the pre-market tomorrow it's down below this level, this low right here, you know, the low of the day, right? I would just get out.
Yeah.
I wouldn't even wait for regular hours.
Okay. Yeah.
You know, because
Keys. I mean, I was actually.
You've pretty much decided you want out anyway. What we're trying to do here is improve your price and improve your exit. But it sounds like even if this starts going up, even if it came up and it got up into some of this resistance up in here, you should probably pull some off because the position's too big for you. You said so, right?
Yeah.
And it's affecting in this position. So,
and you nailed it. It's exactly it. Just trying to get a better exit would be great.
But yeah, it's, so try to get the better exit, but try not to hold on for too much. Don't get greedy with the better exit.
Right.
That exit when it's given to you, and then you've got a position that you can live with.
Yeah, that's the plan.
So,
all right, thank you. Very, very helpful.
Good. Anybody else got anything they want to look at? You can go ahead and mute if you want, or type in the chat. Not seeing or hearing anything, so I think we will take a look at what we got coming up. Kind of same old. We've got what are we? Is it the 19th today? Okay, so we got next week, same again. We'll do a ticker talk and some of the mentoring and whatnot that we've done, and we will also have our regular weekend videos as well. All right, and let's move on to that. So just want to thank everybody for coming out and watching the recording. If you're watching the recording, hit that like button. Go ahead and subscribe if you want. Hope everybody enjoyed this, and hope you guys enjoy the rest of your evening.
You do the same, Kevin. Thank you always.
Thank you, Marvin. Appreciate it.